I'm Jim O'Neill, I'm the chairman of GSAM. I'm involved in essentially all parts of GSAM's strategy for developing our business all over the world. Recently I've developed the concept of growth markets. The growth market economies are the driver of the world economy this decade, and therefore they're going to be the driver of everything to do with our global asset management business. One of the reasons I'm eager to rebrand these countries as growth markets is to help people think with a little bit more clarity. This sort of little bucket known as emerging markets is sort of generally regarded as something you sort of do as a bit of an afterthought. In many of these places, there's enormous positive dynamics going on in urbanization in China and India. Brazil is essentially transformed as a nation. And Russia, of course, is increasingly showing a significant rise of its wealth for more people. And the indirect benefits for the rest of the world because of world trade. The world economy is growing probably close to 5%. Past 25 years, the world's grown by 3.7. The reason why it's growing more strongly than that is because of these countries. And things going on involving these countries are increasingly influencing everybody. Even places as big as the United States are going to start seeing more and more benefits from it in terms of US exports to these countries as well. The scale of growth going on in these countries and the scale of business that's going with it are so vast that people shouldn't think of them as emerging markets. A growth market economy should be thought of as an economy that is big enough to be globally relevant. Any economy that is at least 1% of global GDP or bigger shouldn't be called an emerging market economy because it's of sufficient depth where business people can do things just like they could do in Italy or Spain or many other countries that we call developed. Investors have to get in and out and consider different ranges of financial opportunity and investments. The four BRICS are definitely growth economies. What is interesting is if you look at the next 11 group, which is literally a group of the next 11 largest population countries after the BRICS, 4 become growth market countries: Korea, Turkey, Mexico and Indonesia. They are at least 1% of GDP, and in some cases actually 2% of GDP, and the other 7 should be regarded as traditional EM. 8 of the 10 biggest contributors to global GDP are these 8 growth economies. Their combined GDP increase could be 5 times bigger than the United States, which really puts into, I think, quite brutal clarity the kind of size of economic force we're talking about here. The 4 BRIC countries have between them got nearly 3 billion people. You add on the other 4 growth economies, it takes it up over another 500 million. Those 8 countries are more than half of the world's population, and they're having incredibly dramatic growth. There's an interesting group of countries just outside the growth market cutoff, and these are also really interesting places to watch. Nigeria alone is 20% of Africa's population, and who knows, in the next 20, 30 years, maybe Nigeria will do more and get close to this growth market status too. It would be a fantastic thing for the continent of Africa if it did. If we want to be both the most global investment bank as a firm and within it the best global asset manager, we can't afford to have anything other than the growth market strategy as being what drives us. People can't get their head around the idea that these are the growth engines of the world, are kind of missing out on the biggest thing of our generation. It's hard to see a parallel of this in any recent memory, arguably not back since the first days of the US starting to develop. It's like a remarkable event going on around the world, and most importantly, there are hundreds of millions of people being taken out of poverty. I think there's a lot of evidence that the world economy's growth trend is actually rising because of what's going on in these countries.